Good morning and welcome to the Killik market update. In fact, our last update before Christmas. Now, there's been quite a lot of movement in markets this week following the cancellation of Parliament's vote on Brexit and then followed by the vote of no confidence. So this situation around Brexit is still incredibly uncertain, and it seems as though this uncertainty will continue for quite some time yet. Now, this week we've been having a look at the effects of this uncertainty on the wider UK economy. And in particular, it really does seem to be feeding into the housing market. Now, the Institute for Surveyors does publish a monthly report where they look at the state of the housing market. And in the latest report, there is a very clear decline in the number of houses being sold on a monthly basis. So have a look at this chart here. This shows the average number of houses being sold per month per surveyor. And as you can see, there has been a very clear downward trend since the referendum in 2016. And I think this uncertainty really will cause that to continue. So that's bad news for the economy, bad news for the government as well, because less house sales means less stamp duty coming in. Now, they've also had a look at price data. So this chart here asks surveyors whether they think house prices are rising or falling in their area. There's a zero line going across the middle of the chart. If the purple line is above that line, it shows that most surveyors think that house prices are rising. If it's below, it means most think they are falling. And as you can see in the last couple of months, that line has clearly gone below that zero line. So that shows that most surveyors are seeing falling house prices at the moment. So I think that's a very real side effect of the uncertainty that we're seeing regarding Brexit at the moment. Yesterday, the European Central Bank announced they would be ending their quantitative easing programme this month. So that means the bank will stop printing money in order to buy bonds. If they're going to stop buying bonds, that surely means there'll be a lessening demand for bonds, and you then expect to see a slight decline in the prices of bonds, thereby pushing up bond yields. If bond yields are going higher, that normally causes a strengthening in that country's currency. And yesterday, in fact, we did see an initial strengthening in the euro when this announcement was made. However, the European Central Bank then followed up with a press conference in which they made some fairly negative comments about the European economy. For example, they said they see the growth rate slowing. And I think that made some people concerned that they'd taken away the monetary stimulus at a time when they are slightly concerned about economic growth. So in fact, then we did see the euro start to fall. And yesterday we did end the day with a slightly weaker euro. There's been a noticeable increase in volatility over the last few months, and this can be measured by the VIX, which is a measure of volatility based on the S&P 500. Here's the VIX measure over the last 5 years, and as you can see, there has been a noticeable increase over the last couple of months. So we've been having a think about the types of companies that could benefit from higher volatility. One such type of company could be stock exchanges themselves. So if there's more volatility and that results in a higher level of volume going through, you then expect to see stock exchanges doing well. Also, when volatility is high, you'd expect to see a high use of derivatives, so companies involved in derivatives could be doing well. One such example is a company called CME Group, which is a leading provider of derivatives exchanges. And in fact, if you look at the share price of CME Group, you can see it has done very well over the past few years, but particularly well over the last couple of months when volatility has been higher. So I think that is a company to keep an eye on over the next few months. Now, moving on to the week ahead, it's getting fairly quiet as we move ahead to Christmas, but we have got a couple of companies reporting. We've got Accenture, we've got Walgreens Boots, and we've got Nike. That's it from us for this year, so have a great Christmas, and we'll see you again in January.